Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome to the Shade Party. The AJ Brown Show. Today, we're feeling festive with our accessories.
Blue and
Today,
yellow.
that's right, episode 176. Today is March 21st. AJ, first, glad to hear you're feeling better.
Mhm.
Back to the back in front of the screens. The markets are feeling still a little rough, a little patchy. We had some big Fed info this week.
Yeah.
Where do you want to begin today's show? What do you feel is the most important topic here?
Probably the Fed. So, there hasn't been thankfully there hasn't been much activity with regards to economic and fiscal policy this week, right? We kind of took a break from the tariff stuff, but we know April 2nd is coming around, which is the proverbial deadline for a whole bunch of retaliatory tariffs. So that's going to hit us. But in the meantime, with no talk around, tariffs or taxes or anything like that, the market started to go a little bit on the sideways side. There was bargain buying on Mondays and Tuesdays. Last Friday, there was some bargain buying. Then, of course, the Fed came in with their monetary policy, and also they had one of their four press conferences of the year. And so that kind of, got some people thinking. First of all, you know how you and I, Sip, we follow the quantitative easing. Let's see if
That's
I've
right.
even got that up. Yeah. So they said, I don't even have it up. Let me pull it up. It's right here, Federal Reserve.
And just so that
Um,
we
they
remind
got through.
everybody, that's the tool to
Yeah.
control the supply and demand of our money, right? Our Fed dollars.
Absolutely. So, the Fed uses different tools in order to control monetary policy. So the Federal Reserve Bank is charge of monetary policy. You can think about like the macro moves in the economy, like what you would do with a sledgehammer, looking at like the United States as a whole. And then, the federal government is in charge of fiscal policy, how to basically control the distribution of wealth within the United States, as well as they're in charge of employment, or they have a man. Actually, everybody's got a mandate on employment, including the Federal Reserve. But fiscal policy, they look at employment, but they also look at how we deal on a political way with our trading partners in the world, which, nowadays everything is global versus manufactured and stuff in a single place. So um yeah. So the Fed comes in with their discussion of monetary policy. They seem to be on defense. So one of the things they said, I've got my picture up here with quantitative tightening. So this is where they literally buy and sell bonds on the bond market. And they bought a whole bunch of bonds, and now they're selling the bonds. They'd like to get their holding of bonds down to about 5 trillion. That was their goal when they started selling bonds about 2 years ago, right? They wanted to get this number down to around 5 trillion, which is right here. They're about at 6.7 trillion from an all-time high of close to 9 trillion. So they're on their way, but they announced that they're going to slow this process down. And the reason is as they sell their bonds on the market, they create a supply versus a demand. And when there's a supply, it makes interest rates go up. So by them actually slowing their selling of their bonds out on the market, it'll cause the interest rates to kind of go down a notch, right? And so that's not a bad thing, given that, we need to keep people buying houses. Remember, the 10-year interest rate, which is the bonds that they like to buy and sell, are the 10-year treasury bonds. Those are the ones that banks peg their mortgage interest rate to. So if 10-year treasury bonds come down, so in theory will mortgages, and then people will start buying houses again and all of that good stuff. So that was one of the big announcements, and that actually caused a little uptick in the markets. Now, at the same time, they hinted that, hey, we think tariffs are transitory. Now, when was the last time, do you remember, that the Fed used the word transitory?
My guess would be COVID or something like that. But
They were fucking
in
wrong.
the press release, in the press briefing, the journalists kept pressing them on this transitory. It was like it kept being like a buzzword for like the Q&A session.
Yeah, he shouldn't have pulled that word. He should have looked in his thesaurus for something synonymous with transitory, because he gave everybody deja vu, right? Because the Fed kept using the word transitory with regards to the pandemic, and they were wrong. It wasn't transitory at all. It was like a 3-year ordeal. So they gave a lot of investors, like, doubts about the Fed again, because the Fed really, in his, you look back, they kind of messed up the whole pandemic thing, and they were late, and it took them a while to catch up, and there was a lot of pain once they did catch up, and now there's been pain with the quantitative tightening to get it, so they kind of messed up. So now that they're saying, well, tariffs are going to be transitory, people are like, oh, the Fed's going to miss it again. And so the next day, after people digested that whole, and you're right, the reporters picked up on that right away, and they were like, and so people thought about it, and so yeah, we had more selling off yesterday after, thinking about that. People don't like to hear the Fed calling something transitory, because they haven't proven themselves very well at being able to determine when something's really transitory or
Yeah, and
not.
it was interesting because of the commentators afterwards. Some were dovish, some were hawkish, some were making the case for
Yeah.
one or the other, and it was kind of like, from my perspective, they lowered all their guidances, and so that's not
Mhm.
good. But at the same
No.
time, that may mean lowering interest rates, even like a quarter basis point, which usually when the market hears that, that's like, oh, well, we should buy stocks. And so it's definitely like this really larger gray area now where we really got to hang on.
Mhm.
How many times did he use transitory this week? Right.
And I think it's probably frustrating for them as well, because they were in a position where they were kind of leading activities. Once they finally got us through the pandemic, which was very painful, now they were kind of in a pole position, and they were leading activities, and they were dropping their books. They were, slowly dropping their interest rates, and they felt in control. I think they feel very reactionary again, where they're having to take a back seat, this time not to the pandemic, but to the decisions around fiscal policy. It's interesting because they kind of said, hey, we're not going to touch interest rates until we see some of the ramifications of tariffs. And so they hinted at maybe 2 drops of interest rate points. But now we've got also our investor sentiment, and our investor sentiment says there's a pretty good chance that there's a rate drop in June. And by the end of the year, they actually feel like there'd be 3. So when you've got the Fed saying one thing and investor sentiment being another, that also raises uncertainty. And, the markets just do not like uncertainty. So that's where we are today.
Yeah. And another thing that I kept seeing a lot of was gold continuing to hit highs, in the sense that, like, is that like a flight to quality, like extended? Because it's, how many weeks in a row can we hit, like highs in gold? Um,
It's a doubt in a fiat currency like the US dollar, right? People are hedging their risks by buying gold. Gold's at an all-time high. You wanna look at some charts?
Yeah, I mean, I keep coming back to that 5,800 level that we talked, many
Mhm.
weeks before, and we've been
With, HEMA.
yeah, we've been below it for quite some time. So I'm curious,
Mhm.
what your analysis is, because we may have found a bottom, but we may have not at the same time.
Yeah, right? Well, first of all, I've been really, especially my program participants, they're like, "Man, this is such a down market." I gotta keep cautioning you, and I know I sound like a crazy guy here, but when you have a single down move, that does not make a down market, even if it's an extreme move like we've had here. A down market, by technical definition, has some small upticks to it, and so it doesn't just go straight down, right? So if you want to start trading a down market, I've been cautioning people saying it's not yet a defined down market. Now, we maybe hit a bottom, and I'm putting a big maybe, and you can see I've marked it as a bottom. This was on March 13th with our lowest close. But this, you see, I've got this other indicator here. This is just a simple 3 and 5 day EMA crossing, right? When I want to know that I've got a bottom or a top being found, I like seeing a clear crossing of these two lines, right? Clear, like without mistake. And you can see here that we're just loitering. We're just loitering. We haven't yet crossed above this with any sort of conviction. And so I'm not sure yet. This could be all just a ruse, and we could just start continuing down on this same line as before. I'm waiting to get and understand if we're going to get a clear move up off of this horizontal here. It's lackadaisical. But let's say we did. Let's say something happens and I get my clear confirmation, and indeed March 14th was a bottom. The next thing I'm looking for, SIP, is where is our next top? Because that's going to be all telling. If it's in this zone here, this magenta zone I have on my screen, that would tell me that, hey, guess what? This is by definition going to be a downtrending market, and we should change our posture. Instead of looking at sideways strategies as much, we want to look at downtrending, trend following strategies, swing trading in the down direction, all of those strategies that some people are pulling out prematurely right now. But if we get a top reversal in this magenta zone and start heading down, SIP, I'm on board with pulling out some of those downtrending strategies that we haven't used since the pandemic. If we actually go a little bit higher into this red zone right below this 100% line, well, then I'm staying where I am, saying that the market is sideways choppy and it's a premium seller's heaven. Even if I go above that red line, uh, premium sellers, market, right? And then if I by any chance go above this green line, then I'm going to start, thinking that, hey, maybe tariffs are okay and the market's recovering well and we're back into up territory. So we'll see. First of all, question number one, was this truly a bottom? We'll find out, I think, in the next day or two, trading day or two. Second of all, where do we start heading back down? That's going to be a big uh, aha moment.
Yeah, I feel like this pull is being driven more so by the political discussions and whatnot. And essentially, if we just stop beefing with so many different countries, maybe this could settle out and find a little bit of a bottom, because the data coming out isn't horrible. Like, it's not super
No,
positive, but we're not regressing. We're still chugging
no.
along as an economy. And so
Yes.
some of the logic for a bottom, or some sideways,
Future
yeah,
forecasting.
has some legs
Mm.
to it. So I keep looking at that 5,800 even to the upside, while we possibly get into the magenta. Looks like we're coming back a little bit today, heading into the weekend. So um we'll see. I think what I keep hearing is employment is the next big news, uh that's going to maybe have an impact because of all the cuts, and we'll really start to get some solid data for what that picture looks like. Which,
I think employment, and then also, April 2nd, how much tariffs, reciprocal tariffs will actually get put on, and how much at the last moment will get pulled back.
for sure. Awesome. Well, for those folks that aren't in the thick of the options trading, today is options expiration. Uh,
It
we have a
is.
lot of, uh, I guess, 4.7 trillion worth of options expiring today. And so a lot of the viewers kind of want to get some details, your input on that. So we're going to take a break. And when we come back, AJ's going to give us some knowledge around options expiration, the value of it,
Yep.
and some more details around that. Otherwise, I did just throw AJ's quick links into the chat. So if you're new to the show, head on over there, show some love, hit that like, hit that follow. We've got our indicator suite. You can register for AJ's workshop, learn about some coaching. So very useful link for you to check out. Head on over there. We're going to take a break. Like I said, we'll be back in a few seconds, in a jiffy.
Jiffy.
And as always, we are streaming. So if any of you guys out there watching have a name that you want AJ to run through, feel free to throw it in the chat and we'll get to it if we have some time. Otherwise, sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, when I saw this 4.7 trillion expiring today, first, how's that even possible?
Well, it's the derivatives market, man. And, when people are hedging their bets, they do so with some vigor.
And so the recent pullback, has that been one of the big drivers for the volume increase? Because I'm assuming this
Oh,
is
absolutely.
quite a bit more than the average.
Yeah. And you got to remember that everybody looks at the options market and they think that it's kind of, especially newbies, they think it's kind of like the stock market in that, the shares that are being traded on the floor, that there's a set number. There isn't, right? The option market is set up. I like to bring up the analogy that it's like a flea market, right? And so these people who run the flea market come up and they set up the tent with all the different booths. Each booth is for a different option, strike price, type, call or put, and expiration date. So there's tables for each one, but it's you and me, the individual investors who actually create these things and trade them. You could go to a particular table and you'll have a bunch of people around there trading a lot of these things, creating them and then trading them. Whereas you'll go to some tables where you just hear crickets. There's nobody actually trading them, right? So you got to remember that the options market 1 month could be zero. Another month, it could be 4 point something trillion dollars. And it all depends on how much activity is necessary to protect yourself from surprise moves in stock prices.
And that goes for the writers of the contracts, right? Because that can always,
Yeah.
but so that's how you're protecting yourself. You're writing one of these contracts and there just happens to be enough buyers around.
Well, usually the buyers are the ones who are buying the protection. The writers, I mean, I guess the writers in a way are protecting themselves, but the writers, if you think about it, the writers are like the people who sell insurance. The insurance industry is so profitable because most of the insurance policies that are sold don't get used, right? It's not, how often, and some people may be an extreme, but I've bought car insurance, now for what, gosh, 35 years that I've bought car insurance, and I've maybe used it twice, maybe 3 times in my life, but I still pay into the insurance, right? Well, that's what the writers of the options are. They're the people who sell the options, and their intention, in most cases, is that the people who buy them just buy them for the peace of mind, but don't actually use them, right? And so that's kind of the market, right? The sellers of options, or the writers, right? They're the insurance salespeople, and then of course the people who are buying it are the ones who are buying the insurance, protecting themselves.
And I guess we have a question to kind of expand on
Yep.
this from one of our viewers. So let me go ahead and pull this up. And that is essentially when to close the premium versus letting it expire. Because, like today, for example, if your position's in the money, you could get out of it before the close, or you could just let it expire. And I guess, what is your take on that?
Yeah. So, um, first you have to ask yourself, how do you want to end up? So you got to remember that if it's a call option that you've sold, let's go back to the insurance model. If it's a call option you've sold, you've given that person who you sold it to the ability to buy your stock, right? And they can buy it at that price. So you have to ask yourself, would they rather buy it at the price of the option I sold them, or would they rather go buy it at the market price? So of course people like to buy low. So the easier question is your call price lower than what it's currently trading at? Because if it is, more than likely people are going to want to exercise your option. And if they exercise the option, it means they're going to take your stock, right? The converse is true with a put option. With a put option, you've given somebody the right to sell you a stock, right? So you got to ask yourself, right? People sell high, right? They buy low, they sell high. So you have to ask yourself, is the strike price of the option, the put option I sold that person, is that higher than what it's currently trading at? Because they want to sell it the higher, or is it lower? If it's higher, they'll exercise your option before they just go sell the stock, you know, at the market. So you have to look at that. Now, you also have to ask yourself, how do you want to end up after this transaction? Sometimes, it's not a bad thing to end up with a stock, or you'd rather end up in a cash position. So get that clear in your mind. But then if you want certainty, and usually when the trading price of the stock is very close to the strike price of the option, it could go either way, because some people would exercise you know, they might wanna, sell you their stock or buy your stock. They might wanna do that transaction even at a slight loss because, like what we talked about earlier, they're future forecasting. So they may exercise you. So if you want certainty as to what's gonna happen, you could, a day or 2 before expiration, close your position, right? You basically, if you've sold an option, buy it back to close it, right? You if you've written an option, which is, to write an option, you sell to open, and you open this transaction. To close it, you buy it back. So if you want to, and usually people do this when the price of the stock is very close to the strike price of the option. I mean, the alternative is, if you get exercised, then on that Monday, you just go back into the position again. So in my book, you know, it doesn't, it's six of one, half dozen of the other. But there are some people who want the certainty of whether they know what's going to happen by the end of that Friday expiration. And so the answer is you just buy to close your premium, and you'll be left with whether you're shorted a stock or long a stock. So if you want to close your position because it's uncertain what's going to happen, go ahead. But if it's clear, right, there's a huge percentage, where you already know whether it's going to get exercised or whether it's going to expire worthless. If you already know, I mean, it's clear. There's so much distance between the stock price and the option strike price. You might as well just let it happen, especially if it's going to expire worthless. Because if something expires worthless, first of all, you don't have to pay anything to undo it. And second of all, there's no commissions. So you might as well just let it expire worthless. I've met people who are like, no, I always close positions a day or two before expiration because I want the certainty. The truth is if it's so clear that it's not going to get exercised, why are you wasting all those extra, all that money that's going against your position? So evaluate. That's all.
Yeah, I always feel like on days like this, like the last 10 minutes of the trading session, you see like big whips because there's like these huge positions are being right. And so have
Yeah.
you like is there a little bit, does that make some sense? Like is there some wheeling
Yeah.
and dealing taking place in the
Oh,
pools?
Oh, absolutely. There's people who are crunching the numbers. We had Fausto on, and that's exactly what he does. He follows the order flow. He watches these people do these, forecasts and, deciding whether, trying to predict what's going to happen. My answer is, man, if by chance I get exercised and I either wind up with a stock or I wind up, selling my stock, then I just evaluate the next week and see if there's an opportunity to get right back into the position. So I usually don't sweat it. I'm kind of I'm very disciplined. I already know what it means to get exercised, what it doesn't mean to get exercised. So I don't get all caught up about, whether I necessarily have to end up expiring worthless or not. But some people like that certainty. I just like knowing, it's either going to be scenario A or B. This is defined scenario A. This is defined scenario B. And I have a plan moving forward. But, it makes sense. And usually the rule of thumb, just in summary, rule of thumb is if the stock price is very close to the option strike price, consider closing the position a day or two early. If instead there's a big delta between those two prices, let it expire worthless.
Yeah, and it's almost like a nice end of a chapter. Like even if you're on the right trend, it's like okay, this chapter's closed. Moving on to the next week, month, or whatever, and we'll try and put a position on. Real quick though, on that 4.7, it's about 2.8 of the SPX, 645 billion single stock, a bunch of ETF expirations. So they're adding up all expirations across all asset
Uh-huh.
classes. So
And it goes to show you people are, one of the biggest investments is the index, right? The SPX, the Qs, things like that. And so it makes sense that index options are the biggest chunk of that. And then the single stock options and ETFs. ETFs have been, since I started trading in 1997, I mean, back then ETFs were almost nothing, and now ETFs are bigger than single stocks. So it's
it
interesting.
really goes to show you the efficiency of the market, of how everything is connected. And when you lose money, you can still protect yourself and make money as long as you know what you're doing and you
Absolutely.
have these tools, which is exactly why you created, trading training. We have the program and we have the classes and we have the webinars and all that. So
making sense of all these different investments that have been created over the years. Like ETFs are created investments, they're created securities, and options are created securities. And being able to use these tools that the big traders use to your advantage. In fact, little traders like me and all the people who are following us, we actually have the ability because we can be very nimble. Like we can run circles around these big traders. These big traders have these big positions that they have to worry about, and not creating a footprint and all that good stuff. We can run circles around them. It's easy to follow in the footsteps of good traders when you have small portfolios. So, you know, arm us with those tools and, make us nimble. People always say the little guy is at a deficit in the markets. I actually would argue that they've got the better hand.
especially with the efficiency of execution. I know, for example, I've recently been in Robinhood a lot more, and they've really made options like visual
Their thing.
visual like when you go in and they're like, well, what do you want to do? Do you want to be a buyer, or do you want to be a seller? And they're like, here's the 4
Yeah.
strategies you can use with options. Here's your risk. Here's your, when you do your trade station, and I don't know how you call the little graph where it kind of like levels out. So it's there for your fingertips, especially for the premium selling. It's so simple when you know it, and when you have some long-term positions, and you can just go in there and sell some contracts. So we highly advise anybody to go check out the weekly or the daily workshop where AJ breaks down some of these premium trading strategies. But
You betcha.
we do have a couple names to run through, some names that we see some opportunities, some names where we've got some of our viewers have some questions. So AJ, let's go ahead and dig into your pick of the week for the week. And this is, I believe, an energy play, correct? This is Occidental Petroleum, ticker symbol OXY. You buy or you a seller?
Well, I want to buy right now. So, by the way, you guys remember last week we were looking at Halliburton, right? You might be seeing a theme in mine and in my picks of the weeks, and that is, it looks like we get sector rotation of what are some good sideways channeling sectors. Energy, right? All of the components behind energy, and I'm talking a lot about the fossil fuel type energy right now, not some of the newer technologies. So whether it's a Schlumberger or a Halliburton or an Occidental or even a Exxon Mobil or Royal Shell, BP. These are where I'm looking for sideways choppiness, which is, those income producers for us. So coming back to Occidental Petroleum, we got a really nice signal on March 14th with follow through on this Monday, March 17th. And it actually looks like you could still get in. Even though the follow through was on Monday. In fact, we might get a double bottom here. Some people might even consider it a triple bottom, which would be great for buying this. And so I'm looking at actually picking up some Occidental Petroleum. I could either buy the stock itself. It's a little bit pricey, right? $47.69. The alternative is finding a deep in the money, far out in time call option. And so if you've got access to our options lookup tool, which is still free for anybody who wants to get access to our portal, it's on that links website that Sip showed you. We go to the Occidental Petroleum. We go ahead and look at price components. And I'm looking at the January 2026 leap. And my price component is around 5%. That's my cutoff. And so I really like this $30 call that's going to expire on January 2026, right? And it's going for $19. The current price of Occidental Petroleum is 47. So this is less than half the price. So you're including some of that leverage in there. But yeah, I would go ahead with that call option. We've already missed our opportunity for the dividend. So buying with that call option wouldn't be a bad idea. Or if you've got the bankroll, buying with the stock wouldn't be a bad idea either. And that'll set us up to sell premium next time we get to a top. So that's where I am, Sip. I'm thinking let's go ahead and buy some Occidental Petroleum. If it dips down a little bit, get a better price. Still is a good price trading down here around $47, $48. The substitute option trading around $19. You might be able to even get it for less. These options are trading every $2.50. But I was looking at that, and you've got 45, 47.50, 50, 52.50. You could totally create a collar around this, even with the $2.50 uh, difference between strike prices, and really make a nice premium sale out of this. So you got to start off by buying the stock or buying the substitute option, and then we'll look to sell premium in the future.
And so I'm curious, does the price of oil have any effect on your thought here, in the sense that is that a sector that may not be so much affected by, what's going on politically?
Well, and Iran and OPEC, well, not so much OPEC, but Iran has, did so, played around with some oil prices in retaliation for the U.S. doing some military actions against the Houthi rebels and the whole Suez Canal and all of that good stuff that's happened in the past week. But to be honest, the US in the last 15 years has become the biggest oil producer in the world thanks to fracking. So, when you have some of these countries like Iran, you know, shaking their saber, it's not as significant as it was maybe 20, 15, 20 years ago. So, the price of oil, I think, went up $1, but it's been pretty stable between about 67.50 and about 72.50. Yeah, I'm very positive around Occidental Petroleum. Really great running company. Really makes a lot of earnings compared to the price of the stock, and they give a big chunk back. So great stock to own, and also a great stock to sell call premium against. So I'm
Awesome.
in it to win it.
Awesome. AJ's pick of the week, Occidental, ticker symbol OXY. Before we move into the speed round, AJ, I'd love your take on Tesla, because Tesla's getting crushed, but almost not as, like, it's like one of those sentiment plays. Like, everyone's just pissed off at Elon, so they're just like, sell Tesla, sell Tesla. And it's kind of become, problematic, it seems like.
Well, it's a stock. In fact, it wasn't Warren Buffett, but it was a very big fund manager, and he was asked the same thing. He's like, "It's not a stock I would buy. It's not a stock I would sell, and it's probably a stock that I might miss an opportunity on." So he kind of said it wasn't one that was on his radar. But then again, it might be something that makes people rich, but he won't be in that bucket. Um, yeah, it's not something. I'll be honest, I've never really been interested in Tesla. It's down, but it's down to where it was, you know, ahead of the election. So maybe that whole bump up in price ahead of the election, or right after the election, was just vaporware, and we're back down to where it is. Um, I don't think it's a bad idea for Tesla. I heard that some of the board members of Tesla have been suggesting that Elon step down. Now, Elon has from what I understand, a very big ego. So I don't know if he would step down without a fight. But yeah, I would. It would be smart for Tesla moving forward if they kind of ditch that guy. Uh, he comes with both good and bad news, but um, stocks and companies actually would rather not be in the news headlines for anything negative. So yeah,
Could
I'm not interested in Tesla.
could we have seen a top here? Like, could that realistically be a top for quite some time, given that a
Oh
lot
yeah.
of that was driven by sentiment, not so much, sales, earnings, things like that.
Absolutely. I think Tesla is happy between 200 and $250. And unless something significant happens to their company, they release a new product or something like that, something to actually base the hype on, I think 200 to $250 and separate yourself from, you know, the commander in chief behind the scenes. And I think the company's got some longevity behind them. They make a good product.
Yeah, well, the Cybertruck's been getting some heat because the bumper keeps falling off. I keep
Well,
seeing that.
the Cybertruck looks like a Pinewood Derby car, but the new Model Y, very nice. Model S, all of
Yeah, and
those
even
original
the
cars.
Tesla robot that'll make a drink for you, like, that could
Yeah.
when they have another show and tell where, he's, hitting home runs and cooking you a meal, you're like, "Oh, well, Tesla might be onto something here."
Maybe,
So,
maybe.
they do make products that are innovative, and so if anything is gonna lead the charge up, I'm just, like, fascinated by seeing this unfold, this, like, huge
Oh my
love to
goodness.
huge hate for Tesla, and, it's not really even based on anything behind the actual company or the car. It's like it's all pointed towards the founder, one of not even the founder, the
Yeah.
CEO, and it also goes to show you that that matters. That matters in people's willingness to buy and sell or wanna be advocates of your company. So, lesson to the CEOs out there, be careful,
Yeah,
tread lightly.
absolutely.
Okay, I was, interested to get your take on that, but the people wanna know some other names out there. We'll head down south. Bill in Huntsville, Alabama. AJ wants to know SoFi Technologies, ticker symbol
Oh, yeah.
SOFI. We've looked at this one a few times.
We have, and I think that we advised, when it was up at its top to do some shorting. We said this was the top, and it looks like, it's gone down. If you're in a shorted position, Bill, then now is the time, for us to sell put premium and buy a protective call. So I would sell put premium slightly out of the money. Let's take a look at our option chain on SoFi. SOFI. There it is. So, March 21 today, we've got some weekly options. The next monthly option is April 17. We're trading every dollar. So, I would look to maybe sell the 11 or the $12 put, and then look at where your break even price is, especially after you sell that put. After you sell that put, that's going to reduce your break even price. Buy your protective call strike price. Of course, it's going to be 3 to 6 months out. Buy that around your break even price so that you have a risk-free trade. And that's the trade you do. And now, once you've got those two trades in place, the near term, I'm saying April 17th. If you want to use a weekly option, go ahead. Your near term put sale and your 3 to 6 month out call purchase. Once you've got those two, what we call adjustment trades in place, we also call that our collar trade, hands off. Let this thing just work its way through time. Now you've got time working in your benefit, and you also have a self-adjusting position. So that's where I would be there if. And I'm not sure if that's where you are, or if you're looking to actually now buy some SoFi. This is a buying opportunity for buying some of the stock. It's at a great price. But I think because you had us look at it when it was at its high, you're ready to sell your put premium and buy your protective call.
Awesome. SoFi, definitely a nice price there at that 12, 14, 16.
Yeah, and if you shorted it at $16, I mean, you are really in a great position here if you sell that $12 put and buy a $16 or $17 call. You are going to be making some money this next 3 weeks, and I'm really proud of you.
Awesome. Hopefully that's the case, Bill. Moving on to our next name. This is one I keep seeing in the headlines. It's been in the news all week. Jeff in Fort Lauderdale, Florida wants to know what's up with Carnival Cruise Line, ticker symbol CCL. People are just not wanting to go on vacation, it seems like.
I know. What I think people. Well, what have you been hearing, that people aren't looking to go into the cruise, go on cruises
It's just the pullback on vacationing
in
is
general?
what I keep hearing. Yeah.
There's going to be also, I keep hearing about the airlines starting to compete against each other, and they're going to have really low rates. So yeah, so we got through earnings. It looks like we're at a bottom, but I gotta tell you, I worry about any sector that has this dark cloud over it. And so even though we have a technical, signal here, in fact, I don't even need this bottom chart anymore. Let's just look at this top chart, and I'm going to zoom in here. Even though we've got this technical signal saying now's a good buying opportunity, I worry about when you've got all the talking heads putting a gray cloud, because even if fundamentally things are strong, technically things are strong, this forward forecasting of just rainy days ahead creates a self-fulfilling prophecy. So I see what you're seeing. I see a great buying opportunity at a low price. I'm just worried whether it's a buying opportunity or whether the rainy days will make this go. So tread lightly. If you do go ahead and take advantage of this buying opportunity, whether it's buying this stock, or here comes our options lookup tool again. I'm going to quickly see if there's a substitute option I might be interested in. All right. There it is. It's amazing how much data it pulls up in such a short amount of time. I'm interested in I'm actually interested in maybe this $13 call that doesn't expire until January 2026. Could be that I'm interested in the $15 call. Maybe something around these strike prices, or just buying the stock. I could see you doing that. Make sure you buy the stock in lots of 100. But then if you see any sort of, if you see any sort of tumult coming up, like it starts to dip down, don't feel bad about putting on your collar early. You don't have to wait for it to get back up to 26 or 28. You could put it on at any point. So whenever you have the heebie-jeebies, put that collar on and lock in that self-adjusting trade. But again, I think there's lower hanging fruit out there than the cruise lines. So maybe you look somewhere else too.
Well, that somewhere else might be in our next name, because we did bring it up earlier in the show. And Tony in Boston, Mass, wants to know, can we keep the commodity ride rolling with Eldorado Gold,
Oh,
ticker
yeah.
symbol EGO, which would be one of those equity plays to kind of ride the coattails of the gold rush, basically.
Yeah, the gold rush. That's a good way of calling it. Um, yeah. I don't know about so we missed our buying opportunity. Our buying opportunity looks like we maybe got some follow through. It looks like our follow through came on March 12th. So that was a few days ago. 1, 2, 3, 4, 5, 6, 7 days ago. Um, here's my thoughts on Eldorado Gold since we missed buying it. I don't want you to buy high. I always like to buy low, sell high. I also don't want you to short this. In other words, when it comes up here, finds a top and starts coming back down, I don't want you to bet against Eldorado Gold. So I kind of want you to just pause. I want you to let it run through a top and come back down and test a new bottom. And when it tests that bottom, I want you to be ready. Now, if and I'm not sure where you are in your cycle, but if you were looking to buy into Eldorado Gold, I think you missed your opportunity. You wait for it to top, and then you wait for a new bottom, and that's when you buy. If you did buy in it, March 12th, I think is your follow through day. We got a signal on the evening of March 5th, and it doesn't look like we got follow through until March 12th, maybe a day or two earlier, but March 12th or even March 13th. If you did buy into this, you bought some stock or you bought some substitute options. Well, now you're in the best position. You've already appreciated a good $2. As soon as you get your top arrow, then you're going to sell call premium and buy a protective put. The call premium you're going to sell slightly out of the money when you get your signal, and it's going to be near term. April 17th is the next monthly option. If you want to go with a weekly option, that's up to you. But sell that call option and then buy a protective put. And again, I'd look at where your break even price is after you sell the call option. So, apply that premium to, you're getting a discount on what you paid for the stock. Apply that coupon to your stock and then set your strike price of your protective put close to that. So you create a risk-free trade, right? Because then it's not your money on the table. It's all the dealer's money on the table. And as the clock goes by, you make money. That's the beauty of this premium selling that I think people focus so much on options as a way of leveraging directional moves, and they forget that options have a timer on them, and you can make money on time passing by. And so if you did get into this stock, yeah, get ready to sell premium and buy your protection, and don't do that until you get your signal.
Awesome. Eldorado Gold, ticker symbol EGO. I did see a tweet this week, AJ, that I'd love to get your input on because I thought this was interesting. But DoorDash
Yeah.
is allowing users to be able to take out a loan to pay for lunch after the company struck a deal with Klarna. And so now customers can pay in 4 installments for their DoorDash. And I thought it was funny because there's all these memes coming out. And here's one of Ken Griffith's today. He's like, "You're telling me these loans are backed by consumers who ordered burritos on DoorDash?" And it just kind of is like, I don't know. What are your thoughts on that, AJ?
It brings me back to 2008 when we were taking these really awful mortgages that people had gotten that could barely pay their monthly payments. And we cut them up and we diced them up. And then we repackaged them and traded them on the stock market, right? Credit default swaps is what they were called. And it, it caused a great recession. So you're letting people pay in 4 payments for their lunch. Why can't they pay for their, you really shouldn't buy stuff you can't afford, especially lunch. So It worries me, Sip. It worries me.
Yeah, and then another stat I keep seeing is the default rates on the car loans, which is, a very popular luxury good for the average consumer. And if the average consumer is not able to continue to afford it and pay for that, that becomes one of those credit crunches that starts to trickle in
Mhm.
to other areas. But this one was like, I'm seeing so many people knock it and crack jokes, and it's kind of like,
Mhm.
I don't know, DoorDash, like you really get to be like making people's lives, miserable because they ordered too much food and they can't pay for it.
And food goes bad. It's not like you can give it back or anything, and, it's not a hard item, it's a consumable, so having loans for consumables is oof. Hey, I was just, retail sales was released for February on Monday, and you brought up, that, car sales, and it was car sales that really like, when you separate out cars and gasoline, the retail sales came in pretty good at expectations of everything else. Car sales have been sinking, in the beginning of this year, so across the board, not just Tesla. So it's interesting that you, brought up car sales. I mean, home and then car are pretty much the two biggest purchases you'll make throughout your life is houses and cars. So, when you start having problems with the loans you take out for those two big purchases, that's never a good thing for the economy.
So heading into next week, AJ, I mean, today's options expiration. So I'm assuming next week you'll be looking for some new opportunities.
Yeah.
Other than that, what's on your radar that you want to keep an eye on?
Yeah, I'm going to keep checking out these energy stocks, and I'm really looking at what are the sectors that are in a sideways choppy pattern. Those sideways choppy, we call them range bound. Those are the ones that will produce ongoing income for us. So I'm always on the lookout for which stocks, which sectors, which ETFs are in that sideways kind of reliable up down pattern that I can then turn into 5 months, 6 months, 7 months, 8 months of monthly, dividends, if you will. Not real dividends, but instant. I call them instant dividends. So that's what I'll be looking out for over the weekend and next week is what are the next hot sectors for us premium sellers.
Yeah, and if the lovely folks watching, tuning in, you want to join in on some of those exclusive behind the scenes conversations, head on over to that links page, check out the coaching, check out the website, the entire Trading Trainer website. Head on over to the free indicator section. There's a lot of cool tools. The options lookup tool is still available, and show some love. Hit that
I'll
like.
tell you, Sip, the program, yes, every Thursday, the day before we have our AJ Brown show, we have our program participant. They are on fire. I mean, every week they're bringing 7, 8 candidates. There are so many candidates to sell premium on. And our students, I mean, just being in the circles with those students, I mean, it just helps me with my trading. And I know anybody who's joined the program are like, I just love being in that group.
For sure. And if you want to get access, head on over to those links that I just mentioned. Otherwise, show some love. Hit the like, hit the follow, hit the subscribe. If you have any questions, feel free to throw it in the chat. Feel free to send us a DM, and we'll get it to the right person to get you some answers. Otherwise, yesterday was the first day of spring. The weather's starting to turn. I think that might add a little bit of optimism, get outside, get some fresh air, get some exercise, come back next week and crush it. But that's all I got for you today. Appreciate everybody tuning in. AJ, you feel better. Have a good weekend. Everybody else, thank you for tuning in. We'll catch you guys next week.
Bye-bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if if you're not already a subscriber to the show, hit that subscribe button